Hello everyone, welcome back to my channel Accounts Simplified. If you are new to my channel, please take a moment to subscribe and hit the bell icon so that you will be notified when I upload the next video. Make sure you're watching the video till the end. Alright, without wasting much time, let's quickly dive right into the world of accounts. Today, we will be learning more about accounting principles. In my previous video, I have taught you what accounting principles are and its features, and also we have discussed the three accounting concepts. If you did not watch that video, I have provided the link in my description box. You can go check it out. Okay, coming back to our topic, accounting principles. But before starting, I want every one of you to please take a notebook and a pen so that you can write down the important points which we will be discussing in our today's class. Okay, the first topic or the first accounting principle is business entity principle. According to this principle, it states that businesses are treated as a separate individual which is distinct from its owners. What does it mean? It means that owners and business are two different entities having different liabilities, and whatever transactions have taken place in the business are recorded from the point of view of business, because a company is treated as an artificial person which has been created by law. Moving to our next principle, money measurement principle. According to money measurement principle, it states that all the business transactions which can be expressed in the form of money, that is, all the monetary transactions are recorded in the books of accounts. They are taken into account. And non-monetary transactions like the skill of a worker, the honesty of a manager, employer-employee relationships are not taken into account. Why? Because we cannot convert them in the form of money, or we cannot convert them in the form of monetary transactions. That is the reason why they have been excluded from recording. I hope these two accounting principles are clear. Now, moving forward to our next accounting principle, which is accounting period principle. According to this principle, it states that the life of an enterprise is broken into smaller periods. Why? So that its performance is measured at regular intervals. In other words, we can say that according to this principle, the financial statements are prepared for specific time periods. It can be either monthly, quarterly, half yearly, or annually. Why they are prepared? Because they are prepared at the end of the every period in order to provide a clear picture of the company's financial performance and financial positions. All right. This accounting period concept is also known as periodicity principle. Now, moving to our next principle, full disclosure principle. According to full disclosure principle, it states that it refers to the ethical and legal standards requiring individual or organization to provide complete and transparent information about relevant facts. In other words, we can say that the accountant should provide all the necessary data and facts in the financial statements so that the interested users are well informed about the financial performance and financial position of the business. All right, it ensures transparency of the organization. The next accounting principle is materiality principle. According to materiality principle in accounting, it states that the financial statements should include all information which could influence the decisions of the users. It is very important because it ensures clarity and usefulness of financial statements. I hope these accounting principles are clear. Now, moving forward to our next accounting principle, which is conservatism. This accounting principle is also known as prudence principle. According to this principle, it states that we should anticipate our losses before they are incurred, but we should not anticipate our profit. If I have to give an example, it can be, stocks, they are always valued at market price or cost price, whichever is lower, and this is being stated by the conservatism principle. So, in short, we can say that according to conservatism principle, it states that we should anticipate our losses before they are incurred, but we should not anticipate our profits. The next accounting principle is matching principle. What does it states? It states that the expenses must be matched with the revenue so that which are recognized in that period. I repeat, according to matching principle, the expenses which are incurred in an accounting period should be matched with the revenues recognized in that period. The last accounting principle is dual aspect principle. According to this principle, it states that for every debit, there is a corresponding credit, which means every transaction has two-sided effect. That is, one is debit and the other is credit. This accounting principle is also known as duality principle. So I hope you have understood these 8 accounting principles which we have discussed in our today's class. So before winding, let's quickly wrap up what we have learned in our today's class. Number 1, business entity principle. What does it mean? It means that the business and the owners are two different individuals. Number 2, money measurement principle. According to this principle, it states that only the monetary transactions are taken into account. Number 3, accounting period principle. According to this principle, it states that the life of an enterprise is broken into smaller periods so that we can measure its performance at regular intervals. Number 4, full disclosure principle. It refers to the ethical and legal standards which are required for individual or organization to provide complete and transparent information about relevant facts. The next principle is materiality principle, which means that the financial statements in accounting should include all information in order to influence the decision of the users. The next principle is conservatism. What does it mean? It means that we should anticipate our losses before they are incurred. It is also known as prudence principle. The next principle is matching principle, which means that the expenses must be matched with the revenues. The last principle is dual aspect principle, which is also known as duality principle. According to this principle, we have for every transaction there are two effects. One is debit and the other is credit. So I hope you have understood the accounting principles. If you found this video informative, please give it a thumbs up and share it with your friends and relatives. Till then, take care.